Hello, this is Steve Malone with Compass FX. I hope you're doing well today and you get some good trades. In today's video, we're going to discuss using a trend line to get better money management. Now, how do you go about doing that? Well, we've often heard it said that it's best to buy low and sell high. We all try to do that, but tendency is we tend to buy higher and sell lower. In today's technique, if using a trend line can help you take an advantage of entering the market at the appropriate time and reduce your risk, you might want to sit up and take notice. Grab a pencil and pad and follow along with me, because I'm about to show you a simple little technique that you can use in your trading that really can help you with having a better reward to risk ratio. Now, many of us in trading the Forex would like to have a 3-to-1. For that matter, many of us would just love to have a 1-to-1 reward to risk ratio. But using this technique, you can actually improve your money management, improve the odds of the market working in your favor, especially when the market is trending. Now, this may not work exactly as well in a range-bound market, so just follow along with me. If you notice the euro dollar, and you can look at your own chart after the video and look at what the euro dollar has been doing over the last number of days. This week we've seen a downward decline, a downtrend in the euro dollar. And so we can see that the euro dollar has gone down, come up a little bit, gone down, come up a little bit, gone down. But overall, the trend, top to bottom, from over on the left to the right, if we were just to draw a single line from one side to the other, that line would suggest that we are in a downtrend, if we just simply connect where we're at over here to where we started over on the left. What I'm going to do is I'm going to take this trend line here and I'm going to really start working with it to help me find better entries and thus help me with my reward to risk ratio. So what we're looking for is the fact that we talked about a moment ago that many of us would like to buy at a bottom. Okay, so there's the bottom right there of that little area right there. And oftentimes we'd love the opportunity to sell right at the top. So when the market comes right to the top. But that's often easier said than done. So let's take a look at this. If I take this trend line and I simply do this, I know that we have this downward action, okay, and you can do this on any time frame. I just happen to be used because you can see the number of opportunities available to us in the market. So what we're going to do is take the trend line and place it at the bottom, okay? And I'm going to take the other side of the trend line here and I'm just going to go along the lows. I'm going to find an average of about 3 lows, okay? And I'm just going to put that on the chart. Let me move that just a little bit here. So I have a low, and another low. And that's a diagonal trend line to the upside. So what I'm doing is I'm literally just placing a trend line following the higher lows. Now this is good in the event that we're going short with the overall trend. And here's what we're looking to do. We know that the market is pulled back. And why is the market pulled back right here? Most likely the market's pulled back for profit taking. Someone entered up here. It went down. They want to take their profits. That profit taking initiates new buying to the upside. Well, if the trend continues going short, well, a couple of things are going to take place. One thing is going to happen is that the market will probably come back over, and when the market comes back over, it's going to have to prove that that right there is the floor, that that's the low point of the market at that time. So we're going to look to see that the market will at least come down and break the 908 level. Now obviously we see that the market did this. Now then, where does the risk reward come in at? Well, think about this. The market is pulled back up to the top here, and the tendency of the market is, as the market's moving up and down, it has a tendency sometimes to test previous highs and test previous lows. So in the event that we look at this and you say, well, I tell you what, I want to go short below this top, but what I'll do is right above this high, I will look to put my stop loss up in this area. So I'm going to put my stop loss up here, and my entry order, if I was just trading the break at the bottom and looking to enter, I'd be looking to enter right in this area. Okay? Now think about this. If I were to just enter based on breaking the low, which many traders do that, I would have to look at the fact that the market here, if the market were to come back up, if it broke just suddenly and came back up, it would probably have to test that high to see if that really is the high of the market. And so I might look at putting my stop loss right above that high, which is 46 pips. So I would literally have to see the market have to make a move of 46 pips in order to cover the potential loss to the upside. Now obviously the market did make a move down here of about 76 pips and it worked out nicely, but it doesn't always work out that case. So think about this. Think about the fact that suppose for the moment we were way over here and we didn't see exactly what the market did. And we're thinking to ourselves, well, that's the top side, here's the bottom side of the market, and if I look over here to the far side, if our target back on what happened in the past is that low point right there, well, that's this level. So let's just take a look. If we entered the market short at 908 and we just happen to make it down to where we were before, well, that's about 44, 45 pips. What's my stop? My stop is about the same, 45, 49 pips. Yikes. That's a 1-to-1 potential there. Don't know if that's as good as we'd like it to be. Now check this out. Maybe some of you have already caught on to this. Because suppose for the moment we were to enter on the break of the trend line. So what we're looking to do is that as soon as the market breaks the trend line and closes below the trend line, oftentimes the market will come back up and it will test the trend line. And you can see the market came back up and tested that trend line right there. But then what did the market do? The market moved down, and as we know, we looked in the, moving forward, we know that the market already moved down. Now check this out. Think about this just for a moment. The market closed right here, and let's say we entered the market somewhere right about that level, right about the open there. Now think about this. In this case, our stop loss is much smaller, about 30 pips or so. Our potential gain is only about half that amount. But suppose the market were to break and continue running down to that area. So let's say, for instance, again, we were looking for that low, for the market to get back down to that low. Now look at this. We have about a 30 pip stop loss, but yet we have a potential 60 pip gain. There's our 2-to-1 right there. And think about this even more. Had we had some other targets or other ways of looking at the marketplace, there's a potential that if we were able to capture that move down to this level, there is your 3-to-1 risk-reward ratio. And this happens over and over again in the market. And I've got some examples to show you here. So if we take a look at this a little bit more in detail, I'm going to move to the next Euro-Dollar 1-hour chart. And I've got it set up with my dots levels. Just using the dots method indicator. Some of you have already been using this. Actually, hundreds of traders around the globe are already using the dots method indicator. If you want to learn more about it, go to www.compassfx.com/dots and you can learn more about the dots indicator. What it does is it literally places levels, entry, exit, and target levels on your chart at the open of a trading session. Which is beautiful because now we have a roadmap. We have a potential place where we expect the market to move to. So take a look at this. Think about this for just a moment. We drew this trend line, if you remember, right up here. Now look, suppose for the moment we entered right at that area right there that we talked about just a moment ago. We entered right at that area, about that 920 area. If you remember back over here, it was about that 924 area. Now we're looking on our dots here. Now we enter on a break of this. Now obviously the market pushed back up, but our stop loss is right above that. So our stop loss is sitting right up here. Again, we're looking at the possibility of about a 30 pip, 32 pip stop loss. But yet, look at the potential gain and look where the market comes down to. And we have levels already identified as to where the market could potentially go to. And we look for the market to move right about from that level down to the sell target number 1 level there's 66 pips. There's our 2-to-1 risk-reward ratio. And look here, coming on down to sell target number 2, which it almost did, is our 3-to-1 ratio. How do you like that? Simply using a trend line to improve your risk-reward ratio. And again, here's another opportunity right there. We have this pullback. You just draw that trend line across the lows, okay, and you wait for a close below. Now the market tested. Now when the market tested back up, it didn't break that new high. So that new high, we would put our stop loss right above there, right about the 890 level. Our entry would be somewhere right in this area right here. Now in this case, from our entry point up to our stop loss level is about 40 pips. Now it did reach down to the sell entry level and it didn't go any further, but even from that standpoint down to the sell entry level, that's about 77 pips. There you go, another 2-to-1 risk-reward ratio. And the market continues. As a matter of fact, today I traded in our Dodge trade room. We looked at that opportunity. And the market did make that move down, and it did it again during the New York session. You can't see it too well here, but if I go down to about the 30-minute chart, you can see that today we, during the New York session, literally took this trade down for a few pips back down the next level, having a fairly tight stop loss. You can see this on just about every single currency pair. Here's a good example right here of what I'm talking about. And you see that we have these higher lows. Set your stop loss above. Your entry point is right about here. Now look at that stop loss. There's a stop loss there of about 20 pips or so. Just getting back to the floor, we're at 35 pips. Okay, that's pretty good. A little bit beyond that 1-to-1 risk-reward ratio. But look what the market does. It comes down to that sell target number 1. And we entered back up here with a fairly tight stop, and look at that. Well beyond our 3-to-1 risk-reward ratio, simply using a trend line and waiting for the market to break that trend line. Now there's a bunch of reasons that go on behind the market as far as buy limits and sell limits and all the various things that go on from an institutional perspective. From a retail standpoint, you're getting the opportunity to sell near the high, okay, or buy near the low. Now we had that situation in the Swiss overnight. Here was an opportunity where we put our stop below that swing low. Instead of buying at the top up here, we look to buy as the market breaks and holds this trend line. And that was right about at the open of the European session. Here's the European session. The dots have already plotted the levels. Okay, so from this point down to our stop would be about 13, 14, 15 pips. Okay, just to get back to the top would be nearly double that. There's our 2-to-1 right there. But the market moved up and did hit our buy target for about 60 pips. Okay, now I got your attention. We got a 3-to-1 just simply using this technique. And this technique, you can use it on metals, you can use it on indices, you can use it on other financial instruments as you trade. So like for instance, here's gold. Look what's taken place over the last few days in gold. Look how many retracements you could have taken advantage of. Look at this one right here. From this standpoint here down to this level here is about a 30 pip stop loss. Just getting back up to this high was about 25, so a little bit less, or 20 there, so a little bit less than 1-to-1, but look at this monstrous move to the upside. Again, here's an opportunity to get in. Let's say we got in up here, back down here, about 54 pips, and it pushed on up to about 69. So in that case, not so good, but we're still at the 1-to-1. In this case right here, coming in right about here, we have a stop loss somewhere in the ballpark about 30, and we get a push up to 69. Let's say we do 60. There's your 2-to-1 right there. Simply using this little technique. And one more. Let's say we got in on the break here. Now again, this is an hourly chart. Maybe intraday somewhere we were able to get in. Maybe a little bit better. Right on the break here. And that's about a 45, 50 pip to the stop loss into the upside. Well, there you go. Not quite a 2 to 1, but a better risk-reward ratio. So the next time you're thinking about stepping into a trade and you're thinking, well, I'm just going to wait for it to break the top here, and let's say you have the dots indicator and you're thinking, well, I'll wait for the market to go in at the buy entry and then buy it to the upside. Why don't you consider this little technique and look for the lower highs on average, it doesn't have to be to the pip, or the higher lows on average, and find a point by which when the market breaks the trend line, closes on the other side of the trend line on one of the intraday charts, then look to enter there. And your first thing you're going to be considering is, okay, what's my stop loss distance? If my stop loss distance, okay, there's about 15 pips there. What is it to just to get back to the top? Well, that's about 26 pips or so. Pretty decent. That's a 1-to-1 scenario, a little bit more than 1-to-1. But if we pushed on up to one of our dots levels, well, now we have a pretty decent trade and a decent 3-to-1 risk-reward ratio, possibly even better. Well, hopefully this little simple technique of drawing a trend line along the higher lows to go short or the lower highs to go long will help you in your trading. Y'all make it a great day, get some good trades, and we'll talk to you next time. Bye-bye.